Nice to have you with us. We have, over this half hour, been going through with our special guests stocks they would consider dating or marrying. It's our theme on this Valentine's Day. But what about the ones that got away? Well, we're back now with Brianne Gardner, David Burrows, and Laura Lau for more on that particular subject. This comes up a lot, right? We even hear it from our audience members. I thought I should get into this one. I missed it. Now I don't know what to do. Brianne, I'm going to start with you and a name that comes to mind on this particular subject. Anyone in particular?
For us, it is GE or General Electric. A lot of people know home appliances, but they actually have, are very heavily invested in the industrial space, a dominator globally. Also in the wind turbine and engine space, so airline engine space. So they had really, if you look at the stock historically, before kind of January 2023, it wasn't looking too great. So it wasn't really on our radar. But since then, the stock was up 96% last year, already up 12% year to date. So to say that one got away from us, I would say yes. But, I would say we didn't get in that stock. It's not one that we own. But if you are an investor in that stock, I would say this wouldn't be a bad time to be taking profits off the table. They've been doing some spin-offs in healthcare recently and also going to spin off their energy business as well. But for us, it didn't check all the boxes, is what I like to say. So, it's ranked only a 4 out of 10 from a value score for us and a 5 out of 10 for fundamental. So, sometimes the one that got away, everything happens for a reason.
Well, and, we were talking before about the communication from a company and can you buy into that? And they did a lot of communicating about trying to turn things around, and we've seen some of that reflected. I'm going to talk to both Laura Lau and David Burrows for their one that got away, because interestingly, you both selected the same stock, and I'm going to let our audience know that it is Ferrari. And Laura, maybe you can talk to us a little bit more about what happened with Ferrari from your perspective.
So, the stock symbol is race, so it raced away from us, literally. So, it's a great company, great brand name. But what we were concerned about is, number one, the valuation. It was very high. Number two, they don't make a lot of units a year. So if for some reason you have issues, you don't make expectations, the market's not very forgiving when you don't meet expectations. But what we do see going forward is, as I said, even though the valuation is high, they are expanding production, so that will help support that valuation.
David, how did this get away? Like, what were you looking at that made you think, about Ferrari?
Look, there's a lot of fish in the sea, but this is one we've desired for a long time.
Okay.
The problem is we just didn't think we could afford it. The truth is, it's our fault. It got away. This is a company that has shown it's recession-proof. There's so much demand at the very highest level for luxury goods that even recession doesn't seem to slow it down. They make beautiful cars, and more people want them than can have them. So the fact is, it's expensive for a reason, and sometimes great companies are that way, and sometimes you just don't get another opportunity.
And is that the case? Is that opportunity missed, do you think?
This is one that probably could be bought here, but it's expensive.
That's the issue. Yeah.
And so you have to be ready. But Tesla shareholders could talk about that too.
Touche.
Right?
Yeah,
and good companies can go a long way.
All right, pricey stock, pricey vehicles, but strong demand on the Ferrari side. Want to add one bonus name, Laura, that you brought to the table. This is not very inviting on a Valentine's Day, but this is the name you just want to avoid. Although a company that actually is getting a lot of business on this Valentine's Day. Tell us about it.
So Hershey, it's a great company, but one issue they're having now is their biggest input, cocoa, has doubled in price. So you have options. Wow. Either you increase the price and people buy less, or your margins get squeezed. So people will still buy for Valentine's Day, still buy for Easter, but they'll probably buy less. And then the other thing is people like to snack on chocolate. Well, they snack less because they're better off buying something else that's cheaper, other candy or chips or something else. So that's why we would say temporarily to avoid this one.
Yeah.
Maybe that's why we've seen the run up in the healthcare stocks this year.
Isn't that
And that's the other
interesting?
thing, as you
Yeah.
talked about, it's also got some headwinds from, the GLP-1s, those, obesity drugs. So will people be snacking less, especially on chocolate?